Hi everyone, this is Aki with another tax video. We're going to go over the Form 1098E, which reports student loan interest that was paid to lenders. And that information can be used on your 1040 and Schedule 1 to basically claim student loan interest deduction. So this is one of the simplest forms. There's really not much information except box 1 has that amount of student loan interest received by the lender. The lender is reported in right here in this box. So it'll be the name of the lender and then the tax identification number, which is kind of like a tax ID for the lender. And then it's your information, whoever was the borrower. So it'll be listed here, and then an account number, because maybe you have a couple of student loans from the same lender, so that's why the account number will be listed there. You have to receive this form if you paid more than $600 in interest. However, many people receive it even when they pay much less. And if you didn't receive it, try to get that information from your account, from the lender that you had the student loan with. In past couple of years, because of the coronavirus pandemic, the student loan repayments have been stopped for a lot of taxpayers, and so maybe you have not seen this form for a bit. Now I will talk about some of the specifics, but this is where the information comes in on this form, and once you receive it, it's very important to include it on your tax return because you are missing a deduction if you don't, and it's one of those deductions that people miss a lot actually. Now this is a deduction, so what it means, let me show you. So this goes on Schedule 1. So Schedule 1 are these schedules, Schedule 1, 2, 3, which are schedules that are attached to Form 1040, and you might not see them because many people do it online or they go to tax preparers and they do it for you. But basically, a lot of this information that goes on 1040 goes in the schedules because they're very long. There's a lot of options. So the Schedule 1 has Part 1, which is additional income, which could be added to your 1040. And then Part 2 has adjustments. Adjustment means pretty much subtractions from your income. And the student loan deduction is right here on line 21. So that information, all the adjustments are added at the very bottom. Okay, let me show you how it is. At the very bottom of the form, line 26, and that goes to 1040. And 1040, where do we go to? So that's another tricky thing with the 1040 tax form. Basically, all these schedules having 2 parts each. So we're talking about 6 different lines where that information flows through page 1 and page 2. The information from Schedule 1, it goes to line 10 on the 2021 tax form. We see if it's the same for 2022, but it's going to be pretty much the same. Many of the changes now that IRS tries to change on the schedules, so it doesn't affect so much the main form, the 1040, but that's where it will be here. So it's important to know that we're talking about it. That's a student loan is a deduction. It's not a credit. Credit would reduce your tax due dollar for dollar. So if you have a tax due of $100, you have a credit of $100, you all be wiped out and you'll be at zero. You wouldn't have to pay anything. If you have tax liability at $200, credit of $100, you'll be $100 that you have to pay. With deduction though, it's different because deduction is not dollar for dollar. It's actually going to affect you at your tax rate. So you see on the 1040, we're adding all the wages, all the interest, pensions, Social Security benefits, all this stuff, it's added up. And then before the IRS figure out, or the tax preparer for you, or the software, how much tax you have for the year, you can subtract the, student loan. So you're subtracting it from your total adjusted gross income, basically. So your total income, then you make the adjustment, and then you get to adjusted gross income. And that amount is used. Also, we still, have to subtract standard deduction, itemized deduction, but that's when later on we find out your tax. You can use it for any loan that's for qualified education expenses. You took out the loan. So you took out the loan for yourself or your dependent. So for example, if your kids are your dependent, they're in college, they cannot claim the deduction on their tax returns if they are still your dependents, you can claim it as a parent if you claiming them as dependents. So that's very important. So whoever took the loan for the dependent is also the one who can get the credit. And you were obligated to repay the loan. So obviously it has to be your loan. If you're not sure if you can claim the student loan interest, there's this interactive tax assistant, and I put a link as well. And you can just provide some information and you ask you a couple of questions and you will tell you if you can claim it or not. Now, publication 970, and I know it might be big, but actually this one is one of those very useful publication for IRS, has all the education credit listed here. And you can just scroll down, and if you go to student loan interest deduction, you will have more information. It's pretty straightforward. You can deduct how much. Okay, we didn't talk about how much. You can deduct up to $2,500. So let's see what it is. Maximum $2,500. And in my other sheet, it says the same thing, up to $2,500 of interest that you paid during the year. So each of the form will be for a specific year, and that's the amount up to that amount. However, you have to be realize that there are some income limits. So let me show you. Right here, you can see the effects of MAGI, magnified adjusted gross income on student loans. So if you are single, head of household, or qualifying widower, if you not make more than $70,000, so up to $70,000, you can deduct the whole $2,500. Given that you qualify all other ways. If you make between $70,000 and $85,000, there are some phase outs. So some of that deduction won't be $2,500. It will be reduced slowly based on how much money you make. After $85,000, if you are single, head of household, qualifying widower, all of it's eliminated. So if you make more than $85,000, you won't be able to deduct that student loan. For married filing jointly now, the phase out is over 170. So between 140,000, if you make less than 140 and you married filing jointly, you can deduct the whole amount. If you make over 170, you can't deduct any of it. And between those two numbers, there's reduced amount. However, you have to realize that actually the $2,500 student loan deduction it's actually for both. So you get it per return. So $2,500 student loan deduction is per return. So if you're filing together, you can deduct $5,000. If both of you have student loans or $2,500 each, you can maximum deduct $2,500. Then you're thinking, oh, so maybe I should file married filing separately. Yeah, that's not going to work because that's one of these things that you cannot claim it if your filing status is married filing separately. And that's actually true for many of the education credits and deductions. So it's not just true for the student loans. So if two of you have student loan deductions, if you combine amount is less than $2,500, you can include it. If it's more than that, you'll be limited for that amount. If you try to file married filing separately, you won't be able to claim it at all. So these are the limitations, but it's one of these deduction that it's important to know about. And I'll put the links in the YouTube video so you can read more about it if you want to find out more. So thanks so much for watching.